Hustle time, can you hear me?
I can hear you now. Still waiting for the sound to pop up on YouTube.
Okay,
There it
great.
is. There it is.
All right, perfect. All right, let's get started. How you doing?
Just got back from another FSD drive. I went to the dog park and then back to Specs. I don't know if you guys are familiar with the liquor store, but yeah, I love me some FSD.
Nice. Um, what's on your mind today?
Nvidia earnings. Like I said, I'm not an investor, but I mean, the most lucrative company on the planet. I guess everybody eyes should be on in that direction.
Yeah. Well, let's cover the Tesla stuff. I expect this space to last about half hour, and then we can go into Nvidia stuff on YouTube for those of you interested in Nvidia stuff. So Tesla, um, how are your rides going? FSD rides?
Very few disengagements. Everything feels to be smooth, especially the transition from the city streets to the highway stacks. It's almost like you can't even tell. And the way it's zipping in and out, it just feels like a seasoned driver. No more permit. I think it's ready to have its license in most situations. Still waiting for feature complete and for some of those early beta testers to get version 13. It'd be nice to see it by Thanksgiving.
You think V13 is gonna come by Thanksgiving? Okay, let's see. And when you say it's just rolling out to a few external customers, right? Or do you expect it to go wide?
Definitely not going to go wide. I'd like to see it internally first, and then some of those OGs, post their videos and give their takes and whatever the process Tesla has. I'm just super grateful because when I get it, it's a very polished product. So with this being my only vehicle, I don't want to be out there downtown Houston and having to have surprises. So really grateful to that first set of group individuals that get it, because when I get it, it's pretty spot on. So
Okay, cool. When do you think FSD 13 will go out to majority of the eligible fleet? So let's
I'd like to.
say, I think right now in US and Canada, there are maybe 3 million cars. When do you think it'll go more than 1 million cars?
Um, I'm saying Q2, no later than Q2 of 2025. I'd like to see it in Q1, but that just depends on if they can break that 500,000 vehicles and how many of those get FSD on them and how many users actually subscribe to it and actually start driving. But yeah, no later than Q2 2025.
Yeah, I agree. I think at least hundreds of thousands of cars will have it by Q2 spring update, and so that should be good. What do you expect from FSD 13?
I'd like to see some finality, right? Feature complete, being able to reverse. If I could banish it, like if it takes me to the front step of an establishment, I'd like to be able to, with the press of a button, have it go find me a parking spot and then have that actual smart summon bring it right back to me and, specify designated locations that are safe. Um, yeah, I don't expect as many critical disengagements when it comes to you know, putting itself in awkward positions. And they did tremendous work with the glare and heavy rain. I had one critical disengagement coming back from the Japanese consulate, and the rain, it's just a torrential downpour, and it took me off of FSD. And Yosh was like, "Take over," and I was like, "I think the car can handle it." But I'd like to see some more. The progress they made is amazing, but that one disengagement kind of had me a little, my heart sunk.
Do you think FSD 13 is going to increase take rate?
Without a shadow of a doubt, we're gonna see some the videos that are already being posted, and I love seeing how tech is just progressing, and more people are just posting their videos. Watching the software perform the way it does, when it becomes feature complete, we're going to start. I mean, that's the gateway to unsupervised. Um, yeah, I can't imagine that the take rate. I was just driving today with Yoshchan, taking her to work, and I look around and I see a lot of Teslas, but I don't see a lot of I still see a lot of individuals holding on to the wheel. And it's like, do they not know there's a better way? And so I just hope the awareness is going to continue to spread as individuals like myself and all of the OGs continue to post their videos. There's just a better way out there.
Okay, you mentioned a critical intervention earlier, and you would like FSD 13 to lower critical interventions. Um, do you use FSD tracker at all?
Not me personally. I don't think I use it enough. Like maybe like Kaz or somebody, their information on the tracker is probably pretty vital. But me, I don't. I'm using it, but my wife really uses it as an autopilot. I probably should, um, but no, I hadn't really reached out and tried to get my data on the tracker.
Yeah, I mean, so how are you going to know that a lower? I mean, I guess you're talking about personal experience. You want FSD to do better for you personally, but we need, for investment purposes, we need a way to measure it, obviously. So Tesla doesn't share the data, so I do look at FSD tracker. I know it has its shortcomings. It's not perfect, and some people don't like it at all. But that's the only thing we got.
I wouldn't be in the
Thank you.
camp of not liking it at all. I think that there is some usefulness to it, but uh, yeah, I should do it. I should do it.
Yeah, thank you to those who like the YouTube video through the link at the top of your screens. Obviously, I tweeted today that I short Tesla now. Short Tesla. And any questions, comments, you're welcome to request to speak. I don't expect these Tesla Live spaces on X to continue for more than about 30 minutes per day from now on, unless we hit these milestones that I mentioned. And I don't think it's going to happen. So I hope it happens. It's the only way it's going to continue on X. But we can have half hour per day, continue with half hour per day, and then continue on to YouTube after that. So these are the milestones right here at the top of our screens that we have to hit. And currently, we are at 100 likes. We just crossed 100 likes. And there are, of course, people unliking and unfollowing and unsubscribing from Patreon, unsubscribing from YouTube channel because I shorted Tesla. That's okay. I mean, that's expected, I guess. Any questions, comments? You're welcome to request to speak. And I don't think Omar will be joining us from now on. So the floor is open to anybody. And I would expect people with lower followers and who haven't spoken before to have more speaking time. Provided that it's only 30 minutes, unless we hit these like numbers. So Dallas.
Yeah, can you go into detail on your short position, like details of your holding?
No.
So you are short, like you're not just saying you don't believe in the company, you actually hold a short?
Yeah.
Thanks.
Anything else? All right. That was a very fruitful discussion. We learned so much from that exchange. I'm sure people really took away some material takeaways from fundamentals of the company. And great questions, Dallas. Hustletown?
Uh Being short, I guess that's fine. I mean, the Tesla stock goes up and down. Where do you expect it to fall to? Like, how long do you plan to hold the short?
I guess we'll see. I mean, I think the future is uncertain. I just think the company is overvalued right now, given its fundamentals. And also I'm, as everyone knows, I'm macro bear right now. I expect a downturn. So that's obviously part of it as well. Tesla will triple. Go ahead.
I was going to ask why you shorted, but I think just answered that. Thank you.
Yeah. Yeah, I mean, I think primarily the robotaxi opportunity, I don't think is going to play out as people expect. I think the expectations built into the stock, built in the community are extremely high. And I mean, I hope the FSD improves as quickly as people expect or even faster. I think that would be a great thing. But I just don't think it will due to some limitations that we've been discussing in Tesla Live for a long time. I put it on this morning. Nat Painter asks in YouTube live chat, when did you go short? I put it on this morning, like literally minutes before I tweeted it. Any other questions, comments? Please request to speak. Otherwise, we're way behind the like count, so we're going to switch to YouTube. Tesla will triple. Go ahead.
Did you short because you just don't believe that the technology is there, or is it because Elon is too distracted with politics now?
Both. I mean, I don't think FSD will get to unsupervised or robotaxi level reliability anytime soon, as I've been saying here for the entire year. And so this should come to no surprise to anybody who's been listening in these spaces. So, and then two, yeah, I do think he's distracted. I think that Elon has a incredible talent, and the projects that he focuses on, he succeeds. And right now, he's focused on politics. And I expected his involvement in politics to decline after the election, but it's only accelerated. So I think that I don't really see how that's going to change anytime soon. So so that's part of it as well, of course. Yeah. Ready, player?
Hey, this one's more social. To avoid potential rumors, when you make the statement of no Omar going forward, do you mean just for this episode, or is that going forward, and
No, he
why?
said he's not going to come. So I don't think he's going to come. I mean, everybody's welcome. Like, I don't block anybody. Everybody is welcome to join and ask questions and speak. But he says he's not going to come. So
Okay, thank you.
okay. Any other questions, comments? So I tweeted out my short positions. Short Tesla. I'm short Nvidia, which is announced earnings tonight. So I'm going to go to YouTube and we're going to do an earnings preview for Nvidia in a minute. And then they're going to announce earnings. So there's going to be earnings watch party on YouTube as well. So the YouTube channel will continue with the live stream for the next couple of hours, all the way to Nvidia earnings and Nvidia earnings conference call. We're going to do a watch party of that. And then, yeah, let's see. There's another speaker coming up. The fat, go ahead.
I've listened to this space for a while now, and I was under the impression that you're a long-term Tesla bull. So are you still a long-term Tesla bull, or has something changed?
Yeah, I think the stock is overvalued. I think the company will be fine longer term. Hustle Town.
AW Productions in the live chat asked if these are naked shorts. You got puts or are they naked?
Yeah, I'm not going to answer any specifics on the position. Like Dallas just asked, and I said no.
Got it.
Tesla will triple.
Can you name the 5 specific technical reasons why you don't believe the FSD is ready for prime time over the next, 2 to 3 years, I guess, short term?
Yeah, I think that absent a breakthrough in software, which I think is a low probability, but it's not impossible. I think that the training, the GPUs needed for training is going to cost Tesla tens of billions of dollars. And at the rate of 1 billion a quarter, Tesla isn't going to get there for a few years. And that's also if they don't run out of data, unique edge cases. That also depends on take rate of FSD increasing to collect the edge case data, and a number of other factors that we've been discussing in this space for a year now. And I think that the pace of progress is not as fast as we had all hoped, and I hope that it accelerates. I think that it would be a great thing for the world if Tesla improves FSD to the reliability level necessary for unsupervised or robotaxi level as soon as possible. I think it would save a lot of lives, but I just don't see that happening just yet. I think it's a longer term. I think Tesla will get there. I think it's going to take a few more years than people realize. Tesla will triple.
What's your consideration regarding Optimus in that equation?
Yeah, Optimus. I think Optimus growth will be limited by adoption by the society, and I don't see, like, I think there are reasons why it may progress faster than FSD development, but then there are reasons why it may progress even slower than FSD development. So just weighing those things, I think I need more data to kind of decide how Optimus will going to shape up. But even, so on the YouTube channel, we started doing a Tesla DCF. And in that DCF, we put in, you can find yesterday's episode, we put in a few hundred at the end of 2027 external deliveries. And for 2030, we put in a few 100,000 Optimus. So if you look at, think of Optimus as, let's say, $5,000 profit per Optimus, and say 300,000 in 2030, you're looking at $1.5 billion of profit, 6 years from today. So unless you disagree with that forecast, which everybody's welcome to request to speak and defend why, explain why those forecasts are wrong. But if that's the case, then it's going to be immaterial for a while. Tesla will triple.
Have you hedged your short position in any way in case you're wrong?
Yeah, I'm not going to answer any specific questions on the position. I just want to basically transparent with people. Like, I'm not trying to con anybody or anything like that. I don't want people to think that I'm doing this while saying that, etc. So I just want to be transparent as soon as possible after I put in the position. So, but honestly, like, if I was a Tesla investor, okay, like if I was a Tesla bull and I had majority of most or all of my holdings in Tesla, I would want somebody who knows the company to argue the other side. And who else better that can do this? That somebody who's been hosting Tesla Live for now 2 years. So any Tesla bull should see this as an opportunity to come up to the speaker board and argue their case. And I've always welcomed the bulls and bears. That has never changed. anybody's welcome. This is an open floor. I don't block anybody. I'm happy to answer any questions or fundamentals about the company, about macroeconomics. So I would be really happy about this development if I was a Tesla bull. Dallas?
Yeah, no, you won't go into specifics and I won't ask specifics, but are you no longer a shareholder as well? You're only shorting?
Yeah, I'm not going to answer specifics again, Dallas. Do you have any questions about the fundamentals of the company, about my investment strategy? I mean, you're only proving my call that you should not be a speaker in Tesla Life.
I just asked a question. That's what you said to do. You said to ask questions.
Yeah, questions about fundamentals of the company. Like I said, maybe you should also improve your listening skills. Angela, and then Meta.
Yaman, thank you for bringing me up. I am not sure. I just joined, so I'm not sure if I'm off topic. I'm a little shaken up. I just got in a pretty heated discussion with another gentleman that is clearly not a Tesla bull. And we went round in circles, a little bit out of my knowledge base. The question is, so the debate was that FSD is, of course, like never going to work in his eyes, and that electric flying vehicles will come way before FSD, and that why is it that right now Tesla's only at a level 2 where Mercedes is already at a level 3 on the autonomous scale. I don't have a response for that, and I don't know how you get to those various levels. And then, of course, LiDAR was brought up. So I'm throwing a bunch of stuff out, but I'm pretty angry right now. That got too heated and very nasty. So if anybody has any information on the levels of getting to autonomous.
Yeah, I don't think those levels are relevant. And Mercedes and Tesla aren't, the approaches aren't comparable at all. I think Tesla will succeed, and I don't think other companies will succeed in the pursuit of autonomy.
So how do I better defend myself in that opinion without, of course, he came after me that, oh, I'm such the expert on Tesla, which I don't claim to be that at all. And I know they're not comparable vehicles. So I just wasn't sure how to respond, which typically I have a response.
Yeah, and maybe Meta can answer that question. Meta, how would you respond to somebody who says, why is Tesla at level 2, Mercedes at level 3?
The levels are not sequential. So
Yeah, there you
can
go.
go from 2 to 5. You can go from 2 to 4. They're not sequential.
So you can be a level 4 and get backtracked all the way down to a level 2.
Correct. They are per feature. They don't apply to the vehicle. It's on a per feature basis.
Okay, thank you. So would if you have a LiDAR vehicle, which I guess I'm assuming that Mercedes is, would that put you at a different level than maybe Tesla did that's not LiDAR?
No, the
No,
levels have
okay.
to do with who takes liability.
Okay. Gotcha.
Okay, thank you, Angela. Meta, go ahead.
Thank you.
Curious, did you, just based on I'm assuming the topic right now is the short position. Did you do a bottom-up analysis? And I'm curious what your price target is.
Yeah, I mean, I think this stock is overvalued. I think, I don't really have a specific price target. What it should be worth today, somewhere lower. I think maybe around 200 is probably a reasonable level. But I'm just kind of throwing that out right there right now. The DCF that I'm going to build on YouTube will answer that question better.
Okay, I'm curious, if you're shorting something, you must think it's egregiously overvalued, right? Otherwise, if it's only 10 or 20%, that seems like a aggressive position to take, right?
Yeah, I think just note that I also expect a recession. So that's part. I mean, in a recession, every stock goes down, and I think the recession will happen before Tesla improves FSD to the level of robotaxi or unsupervised, and Optimus comes to market in volume. So, the stocks with the higher PE multiples get hit the worst in a recession. And this is just one of 4 positions I have now. One is Tesla, very small position by the way. 2, Nvidia. 3, MicroStrategy, and 4, Rivian. And then there will be another one just waiting for an entry point.
And they're all short, I assume?
They're all short, yeah.
Yeah, I agree with at least 2 of those.
Okay. So Rivian and MicroStrategy?
Correct.
Okay. Why not Nvidia?
I fundamentally agree with Nvidia. I just think same thing with MicroStrategy. The markets can remain crazy for a lot longer than I have patience. So
Mhm.
or political or capital. That's the main reason for it. I
Yeah.
just posted recently about MicroStrategy. I don't understand that. I'm very confused by this market, but that's okay. On the Tesla side, do you want to talk fundamentals or
Yeah.
okay? You asked the other day whether or not
Before we do that, can I go to other people who have their hands up and I'll come back to you? Is that okay? You have time? Okay.
I have about 15-20 minutes, yes.
Okay, perfect. Sean, quick question.
Oh yeah, I was just chiming in to explain the difference with the Mercedes being level 3.
Okay,
I don't know if you guys.
you can reach out to Angela. Wes Won't.
Hey, I am interested in listening to the fundamental conversation, and I will ask questions appropriately.
Okay, Meta.
Yesterday you asked a question about whether or not Tesla would abandon Optimus. I'm curious how much of a weight that probability plays in your analysis.
What was the question about Optimus?
If I think you asked, it was just around the end of the space. I had just joined, so I don't know what the whole context of the conversation was. But you had asked what percentage probability I would assign to Tesla abandoning the Optimus project.
Oh, I mean, I think it's a low probability. Yeah, but I don't think it's 0. I would put a 10% probability.
Okay, so that's not like the core of your thesis, I take it.
No, it's not the core of my thesis. No.
Okay, so the core is just the
Optimus,
recession mostly.
But yeah, I think recessions, like macro bear position is probably the larger part of it. But as indicated by the other positions as well, as you can tell. And then secondly, but Optimus, like a humanoid market being extremely competitive in the future, like for the next decade, I think humanoid market will be way more competitive than even the EV market, is part of my position. So I don't think Tesla will get rid of the Optimus project. I think that's a low probability, but it's not 0. But it's not central to my thesis. But like I said, okay, go ahead.
Yeah, I strongly agree for what it's worth. I think the barrier to entry into manufacturing vehicles is much higher than the barrier to entry into making the hardware for robotics. Even at scale in terms of cost, you can make Tesla could make the robots, say, 50% cheaper, but you're only talking tens of thousands of dollars in difference. And the services will far outweigh the cost of the hardware. And so it's really a software competition, and I'm not sure Tesla or even XAI have the lead there.
Yeah. When do you think Tesla will get to FSD unsupervised? So, when I posted that I shorted Tesla, there was one person who mentioned it's kind of suicidal to do that before they roll out unsupervised by Q2, by July 2025, the person said. And this person drives for Uber, Lyft using FSD, and he logs in a lot of miles. He has a lot of experience using FSD. And he's totally sold on the idea that Tesla will introduce FSD unsupervised in Texas and California by summer. What do you think?
These are hard predictions to make. It's certainly possible in some cities, but that would require them to change strategies and say, we're really going to focus on getting it to work in one city. I think if they did a focused effort on one city and they changed strategies to actually do that, they could. But again, that hasn't been the nature of the way they've approached the problem so far.
Okay.
As an example, they were getting close with V11 and they ditched it and went to V12 because they wanted, I would say, a more perfect solution, and that may have set them back.
Okay. Thank you, Alex Beltran, for the $4 super sticker. I highly appreciate people who continue to support Tesla Live despite my position in Tesla short. Okay, like I said, I hope the company succeeds in every way they're attempting. I think the company will be fine in the longer term, although I do think that the stock is overvalued in the near term. And maybe I'm wrong. I've been wrong before. So, to the extent that you believe that, anyway. Yoda?
Am I dreaming here? What's going on? I came in late, so I'll just listen.
Okay, well, a quick word of thank you to our sponsors. Tesla Live is proudly sponsored by PayMore, your trusted destination for buying, selling, trading, and recycling electronics. Join the PayMore revolution today. Visit one of their stores near you or check them out online at paymore.com. And Tesla Live is proudly sponsored by Joa, your go-to source for premium Tesla accessories. Use promo code Tesla Live at checkout for a special discount on your next purchase. Meta?
Do you agree that used car markets have started to stabilize, at least as far as Tesla is concerned?
Yes, of course. I mean, they're not dropping as fast as they used to.
Do you think that helps explain like their aggressive interest rate offers?
What do you mean? Like, why would stabilizing used car prices? I mean, I think the demand for new Tesla vehicles, if that's what you're asking, is going to continue to be challenged until interest rates come down. And the Fed chair has indicated that they don't, he kind of opened the door. If people go back to Tesla Live, on that episode, we, listened to the conference call together. And I noted right away that he's opened the door for, pausing the rate cuts. And even if they cut 25 basis points, like if they continue to cut at 25 basis points, it's still restrictive monetary policy. And auto loan rates continue to stay high at 9-10%. So, as opposed to 5%, 4-5% back, a few years ago. So until those rates come down, I think Tesla auto will continue to be challenged. So. Sammy?
Yeah, I'm going to go ahead and call your bluff. The theme of this space has always been forget about short-term investing, and you're saying you're still bullish long run, but now you're making a short-term bet against Elon?
So I've always said I want to be good at both long-term and short-term. When I say forget about short-term investing, I think people sometimes come up here and talk about their day trading. That's not what I'm talking about. And this is not a day trade.
Okay, be careful. You do not want to bet against Elon.
Yeah, I don't really see this as a bet against Elon. This is primarily a vote that the stock will decline. This is not a bet against Elon, a bet against Tesla, or bet against you personally. And I just think the stock price is overvalued. I mean, I'm not surprised, but it shouldn't be this difficult for people to appreciate that. Like if you look at Tesla Live likes and dislikes right now, we have the most dislikes ever in the channel's history after 200 plus episodes. Why? Because people don't like this short position, right? And I said nothing bad about Elon. I said nothing bad about Tesla. But when money is involved, I think people get really personal about things. And if I was a Tesla investor, I would want someone who knows the company at a deeper level to argue against me, especially somebody who puts their money where their mouth is, But people don't appreciate that, which that's fine.
you mind sharing if you did it through options or just?
No, I'm not going to share any details.
Okay, I don't take it personally. I'm just worried about your position. And I think
Okay.
we can all agree that Tesla's overvalued, but that's because we all know where it's going. So being on the other side of that is just scary.
Well, convince me otherwise. Instead of wasting time asking about details, whether it's like puts or shares, etc., and making things like, oh, it's a bet against Elon, don't bet against Elon. Convince me from the way that I would appreciate your points fundamentally. Why do you think the stock price is not overvalued today? Convince me.
Further value, like future income and revenues could hit the analysts' forecasts once FSD is rolled out potentially in 6 months or a year.
Okay, Meta, and then Joey.
So the reason why I asked the question about the used car prices is I think there was a narrative about Tesla's losing value really, really fast. And a lot of people who bought cars saw their used car values drop. And so there was a disincentive for them to upgrade vehicles or to recommend it to someone else, etc. I think Tesla made a really big mistake in thinking that cutting prices was the best way to attract buyers. We saw, and we did predict that when the prices cut, that we would see huge demand, and that demand didn't follow. However, I think now that they're cutting interest rates rather than cutting used car prices, it's likely going to attract more buyers. And it is the same thing as a price cut. However, the used car prices stay up, so people's insurances are happier. They're getting, if the vehicle gets totaled or something, they can get enough money back that they can go buy another Tesla. All these kinds of secondary effects. I think Hertz got burned pretty badly by the used car prices falling, and so a lot of rental companies didn't want to pick up Teslas. But if used car prices actually stabilize and Tesla doesn't do that again, maybe we see some additional buyers come and additional markets that Tesla hasn't tapped into in the past.
Okay, Joey.
Do you have a price on the upside that you would close out the position, and same for the downside?
No, I don't really do like stop loss kind of stuff.
Just a follow up. So if it pumped to 500, 600, you would just keep riding it?
I'll think about that when I get there. But really, I'm just interested in more about fundamental discussions, not trading type of discussions. I just want to let people know that, for full disclosure, it's a small short position. Okay. All right. Wes, any questions on your end?
I think I'm happy to tell you like why I fundamentally think shorting would not be a good idea. I can go through that. Maybe I can ask you what you think the technical addressable market is for Tesla. But I understand that you may have a good understanding of that, but it's the time frame that worries you. I think that's correct. Is that correct or not?
Yeah. So you're talking about total addressable market. You mean for auto or energy or Optimus?
But
Which one?
for the vision of the company, right? Because
Yeah.
I think that's the main thing that I continue to stay long on for the long term is the vision of the company. I realize that macro wise, we might be headed for a recession, and the market overall will go down, especially for a high beta company. It will impact them more. I get that. I totally get like why you think that, and that's a bet, obviously, because nobody knows the future. Fundamentally, Tesla's vision will over time accrue more technical addressable market than any other company. I think that's the piece that I'm still focused on. And I
Yeah, I
get
think
in
you're
more,
talking about total addressable market. So TAM is
yeah,
total addressable, not technical addressable market. Yeah, I agree. I
yeah,
think Tesla total addressable market is probably larger than any other company. Obviously this can change, right? And also, just because the market size is large doesn't mean Tesla will have the biggest share or the most profitable share. Like those are assumptions. But yeah, of course,
right,
Tesla is disrupting multiple multi-trillion-dollar industries simultaneously. Of
yeah,
course, it's a huge
yeah.
market.
And then maybe on the technical side, I have not found, in my experience, a company that either acquires more talent as quickly and keeps them for the highest value that they can offer, other than Tesla, because of the mission and the extreme focus on that mission. And from the standpoint of their like source, their source code, like what they ended up generating, that in software is fundamentally in my view, way better than any other company, just because of the path that they're pursuing. So end-to-end neural nets, I think, is the only answer. Larger context window is part of that answer. And I don't see other companies really pursuing that or talking about it. And from the mechanical side or the supply chain side or the manufacturing side, I'm not seeing anybody that has the prowess of Tesla to compete. As soon as these products become available, aka unsupervised FSD and a commercially available Optimus robot at scale, like those two things, I don't see how another company is going to beat Tesla to market with those products.
Okay. Everything you said can be true, and this stock can still be overvalued.
Yeah, totally agree with that. It feels like, from my standpoint, that feels like a maybe 1 to 2 year look, and I'm still focused more on the 5 to 10 year look.
Yeah, that's fair. Meta?
Do you think there's a chance that with a friendly Trump administration, Tesla could end up landing large energy contracts?
Yeah, I think the Tesla energy growth can accelerate with Trump taking out some of the blockers. Yeah.
I'm curious, if that's the case, why not wait to see what the administration starts to do before taking a position? Why not stay neutral?
Well, I don't know what the stock is going to be later. Like, I'm kind of just basing this on where the price is versus where the fundamentals are as of today. And part of those fundamentals, obviously, is the size, the margins of the Tesla energy business, the growth rate, as well as the probabilities assigned to those scenarios. Like, will Trump administration be able to? Like, what do you think is the probability of that?
Non-zero.
Yeah. So let's say, for example, the stock drops to 250, and then Trump administration achieves that goal. Then at that point, the value would increase and the price would have decreased, and maybe you cover your short at that point. So it really depends on the current status of all the fundamentals and the price. Yoda?
I know you were working on the DCF. What is your current fair value for Tesla?
I don't really have one right now. I think it's lower than where it is today. I mean, what do you think is the value of Tesla Automotive today, and then Tesla Energy and everything else?
Well, I mean, I think I have it. I've got it posted at 305 fair value. So I agree with you that, um, literally, if you're very, very short term, um, that today's stock price is, for me at least, it's overpriced versus 305. And the reason though why I'm not selling is because I think if you look back at even just from a more technical analysis, if you take all the dips and the pops and you build a histogram of that, you'll see not a very level histogram. It's sort of very high head with a few, and then a very long low tail, which means that it's not a smart strategy to to really guess the timing of when the dips are coming or when the pops are coming. If you're fundamentally short Tesla, then that's fine. But I think if you're trying to play very short-term games, you're at risk with just the way of how that histogram works.
Okay. Yeah, I mean, everybody has their own investment strategy. I've heard in the last 20 years I've been doing this. I literally started at age 15, and I'm 39 now. So it's 24 years of investing. And I've tried many different methods. I've heard many different, like, there's literally thousands of ways of doing this thing. Your way may be different than mine, and I respect that. But you didn't answer my question, which was, what do you assign to Tesla Auto? What do you assign to Tesla Energy? And then what do you assign to others? And then while you think about that, Meta, go ahead.
I'm curious if you have any thoughts on like Bitcoin, but we don't have to talk about it if this is too off topic. Just from a macro perspective.
Well, I'm short on MicroStrategy, which I think just has Bitcoin. So I think
It's
that
also got a
tells you.
massive multiple over it, so that's a good way to short Bitcoin. Thanks.
And that is kind of weird, isn't it? I mean, we can talk about that too. And I also have questions to Wes about Nvidia earnings that are coming out in a little bit here. But let's go to Yoda, then Joey.
Yeah, I'm gonna post the attribution for 305 right now. So just take 30 seconds. And while I'm doing that, you know, everyone's sounding a little somber right now because I think, it's, if a friend's going to Vegas and has a budget and it's a controlled budget, we're happy for you. Gambling is entertainment, at least. But hopefully, it doesn't start here and becomes a gambling problem. But yeah, I think that's how maybe some of us are feeling for you.
Okay, thanks. I really want to focus on the fundamental discussions of Tesla, Nvidia, and other companies. So no more trading or emotional sports type of comments or questions, please. Joey?
I think this is around the fundamentals of have you like Q4 estimates? Are you expecting a beat on vehicles at all with the tax credit going away, or how are you feeling about that?
Well, I for production deliveries, I go to Troy, and I recommend people sign up for Troy's Patreon. And I think he's a bit negative on Q4 versus expectations. I think that they may hit 500,000 deliveries, but if Tesla does that by lowering prices further, like they did with the Model Y leases, then obviously that's a problem for the margins. And then on top of that, even if they hit 500,000, and let's say they go to 1.8 million, even if they hit like 520,000, whatever they need for 1.8 million, I don't think that's a big deal from a stocks valuation perspective. I think that the Tesla Auto growth rate right now is basically zero. I think Tesla Energy is growing nicely, but there's some blocks ahead of it. Shanghai is ramping, but the profitability of installations in Shanghai is TBD. Like, I don't see why. Like, for example, Tesla Auto margins in China are lower than Tesla Auto margins in North America. Why would that be different for energy installations? And then, so like in my mind, the stock price right now, it all comes down to FSD adoption, FSD pace of improvement in terms of critical interventions and other interventions, and how much people are using it. And I think that will happen slower than people expect. And I said this throughout the year. I actually published a Seeking Alpha article about 8 months ago that basically said this. So, so it's very consistent. But despite that, the stock has run up quite a bit in the last 6 months. Let's see. I think it's up like 100%. Yeah, in the last 6 months, in the last 5-6 months, the stock is up 100%, and a lot of that has come in the last couple of months here. And I just don't see that fundamental improvement in the stock, right, in the company. I really appreciate those of you who are supporting Tesla Live, despite me being short the stock. Crunch just tipped $5 with a question, and another $2 after that. And Kevin Weber tipped $5. Alex Bolton tipped $5. And we have close to 200 likes on the YouTube channel. And this communicates to me that people appreciate the discussion, not necessarily trying to push this position or that position. And I think people should be confident that I'll be fair both to bulls and bears. Everybody's welcome. I don't block anybody. Nothing has changed on that front. But I think the YouTube channel, I think it's going to be more 50-50 now, content-wise, X and YouTube. And that's despite, that's irrelevant to my position in Tesla. It's just that YouTube channel has to grow for X spaces. X spaces don't make any money. I'll always start here, and then we'll try to hit the milestones. So to the extent that listeners want to listen to Tesla Live on X, they should play a part in liking, reposting, getting others to do the same. And we really need thousands of people to act to keep Tesla Live on X. I prefer to keep Tesla Live on X, but if it's not possible, then I got to do what I got to do to make sure that it continues in one form or another. We have to get to 1,000 likes per episode on YouTube. So please go to the top of your screens, through the link at the top of your screens, hit the like button, and I share this YouTube channel with others. Yoda?
No, I was just gonna say, what did Luce do to our boy?
Okay. Any other questions, comments? Otherwise, we're going to switch to YouTube and go through Nvidia earnings preview, which is what I do for Tesla as well in the earnings releases. I go over last quarter's results. We're going to go through the earnings release and then put down some expectations for what's going to come out. And then tonight, Nvidia is announced earnings after market close. So that's obviously a major event for the company as well as the markets. And then we'll try to gain some insights from the earnings call, things that can be applicable to the macro or to Tesla. So everybody's welcome to join for that as listener on YouTube. And I'll send out a StreamYard link to the speaker group. Also, Tom, would you be able to make it, or are you busy today?
Today I will be busy, unfortunately, but I'll be here tomorrow.
Okay, so it's possible that it's just going to be me on YouTube, which is fine. All right, Bronco.
I just sold half of my Tesla. I think there will be a backlash, just like there was when the Twitter thing happened. I didn't listen to the Twitter stuff, so sold half of it. I'm gonna sit back. I believe in Tesla. It's gonna keep going, but I think there will be a backlash.
All right. Anything else, Angela? Any final words?
No, thank you. Ready to head over to YouTube.
All right. Angela, do you want to join us speaker through the StreamYard link?
Sure, if you'd like to have me. I'm kind of multitasking, but sure.
Yeah, that's perfectly fine. And you don't have to have your camera on. I won't have my camera on, just voice. All right, I'm sending over to the link to the speaker DM group. And then we'll head over. All right, thank you very much, everybody. You can join us through the link at the top of our screens. Hasseltan, can you hear me?
Yes, I can.
Hold on 1 second.
Okay.
I need to get better at making sure these things work fine. Sorry about that.
I think you're doing a wonderful job, bro. You're doing awesome.
Thank you. I appreciate that. All right. Now it should work better. Anyway, I think this is as good as it's going to get today. But give me 1 second. All right. Can you hear me okay?
Yes, sir.
Okay, perfect. Sorry about that.
No worries.
All right, let's switch to Nvidia. So here is their investor relations page. Okay. This is the second quarter fiscal 2025 announced on August 28th. Interesting company for sure. Very important company. It's the most valuable company right now on in the US. Most valuable company in the US right now. And let me see if I can rearrange this here. Okay. And also get rid of that comment. All right. I'll work on the editing of the layout. Actually, no, I can do that right now. Look at that. Check it out. Boom. How do you like them apples? Oh, come on. There we go. Perfect. And then, oh, come on. If I do this, it's fine. Let's stick with this for now. Anyway, it says, in the future, when we switch over X to YT for a news, would it make sense to start a new YouTube space to get all these likes again from us Yamaha fans? No, it's fine. We can just, I think what's going to happen is we'll probably have a half-hour space on X and then switch to YouTube right away from now on. My guess is that we'll cover, 20 minutes of review is basically what Tesla Live Rob Maurer used to do. We can hit the headlines, say a couple of words about them, maybe take a question or two, and then switch to YouTube and do that. And this way, hopefully everyone's happy. All right, let's go through Nvidia. So in the second quarter, in the previous quarter, they announced record quarterly revenue of $30 billion, up 15% from Q1, up 122% from a year ago. Okay. Do you have an Nvidia position at all?
No, not at all. I'm just fascinated.
Yeah. How come you don't have a position in Nvidia, but you have one in Tesla?
I tend to invest in things that I'm familiar with, right? I wouldn't have, I don't know Elon Musk, at 2020. The only reason why I invested in Tesla is because I bought a Model 3. So my investing history, spotty at best. I'm super layman, but I'm curious. I want to know why these companies are valued the way they are and how they generate generational wealth. So I'm just going to invest in things that I'm familiar with, and the products of Tesla impressed me so much, they floored me, that I figured I need to have a stake in the company.
Okay, gotcha. All right. For the quarter, GAAP earnings diluted. Let me see if I can get a download press release. Anyway, for the quarter, GAAP earnings are diluted. I don't really care for the EPS numbers too much. So the company is growing triple digits from on the top end, and interestingly, they're focused on revenue numbers, right? That's interesting. They're highlighting revenue numbers. Hopper demand remains strong, and the anticipation for Blackwell is incredible. Jansen said Nvidia achieved record revenues as global data centers are in full throttle to modernize the entire computing stack with accelerated computing and generative AI. Blackwell samples are shipping to our partners and customers. Spectrum X Ethernet for AI and NVIDIA enterprise software are two new product categories achieving significant scale, demonstrating that NVIDIA is a full stack and data center scale platform. Across the entire second ecosystem, we're helping frontier model makers to consumer internet services and not enterprises. Gen AI will revolutionize every industry. During the first half of fiscal 2025, NVIDIA returned $15.4 billion to shareholders in the form of shares repurchased and cash dividends. Okay, so let's take that as a note. During the there you go. I really appreciate this comment from Wes. I applaud Yama for being open, honest, and sincere about his position while being willing to open discussion. Yeah, I wish everyone appreciated that, but thank you, Wes. We'll leave that out for now. Okay. So this is interesting. So during the first half of fiscal 2025, NVIDIA returned $15 billion to shareholders in the form of share repurchases and cash dividends. And their dividends are very little, so it's mostly repurchases. So this is a clear vote that management believes the stock is undervalued. Okay, I think NVIDIA has been increasing their stock buybacks for a while. And I think they just started doing it in the large amounts in the last year or so. And they're increasing their buybacks. As of the second quarter, the company had $7.5 billion remaining on the share repurchase authorization. August 26, board approved an additional $50 billion of share repurchase without expiration. Okay, so authorization. I think these two sentences are kind of meaningless because the board can always approve more. All right. NVIDIA will pay its next cash, that's 1 cent. This is basically the companies do this to qualify for some investment funds that can't invest in companies that don't offer dividends. So it's more of a technicality thing than anything else. Primarily, the company returns a lot of companies return capital to investors through share repurchases. June 7, NVIDIA completed a 10-to-1 forward stock split, which is essentially doesn't mean anything, but gets a lot of attention. All share and per share amounts presented have been retroactively adjusted to reflect the stock split. Q2, this is the last quarter, as you all know. NVIDIA is going to announce earnings in about an hour or two. So, year over year, up 122%. This is, of course, muddied a little bit because of the timing of their latest chip releases. Doesn't always align perfectly like Apple's iPhone releases do. With Apple, I think things can move forward back for like a week or two, but it's mostly like clockwork. So it's not necessarily that the company is growing triple digits, but on the other hand, Nvidia bulls would argue that Blackwell will accelerate year-over-year growth rate, or at least continue this high growth rate with Blackwell. So we'll see. We'll see how that pans out. Gross margin. This is the crux of my short position, my bear arguments, that I believe the gross margins will not continue at this rate, and I believe they'll decline faster and further than the market has priced in. Okay. Yeah, thank you very much for all the support that you guys are dropping in live chat. Nicole Nunley just became a new member, which is great. Steve says, appreciate the transparency as always. Thank you, Steve. Great. Let's continue.
Real quick, what's going to prevent their gross margins from maintaining this level?
This space as well. So Omar is a Nvidia investor. With these margins of 75, 78, 70%, and that's just gross margin, right? Operating margins are also very high. You have a target on your back, right? There's a lot of talent trying to disrupt NVIDIA's GPUs. And NVIDIA bulls may argue that their CUDA ecosystem may prevent that. But I would argue that human ingenuity will find a way around it. And companies, NVIDIA's customers will find a way around it. Like, for example, Google doesn't use CUDA for their TPUs. So it's possible. There are other companies who are trying to develop other GPUs and other software to go with the GPU to at least incentivize some customers to switch over. And I think they will succeed. The incentive to do that right now is in the tens of billions of dollars range, if not hundreds of billions of dollars range. So there's enough incentive and there's enough human ingenuity to make it happen, in my opinion.
That's fair. That's fair.
And then also, some of these high margins were because of hyperscalers' decision to buy, like, shoot first, aim later. They're trying to buy as many GPUs as they can, or they have been, and they're trying to build their AI training capabilities, cloud capabilities as fast as possible. But I think that will backfire for them. I think that the investor community will punish those CEOs who mindlessly buy these GPUs at 4 times, 5 times, 10 times prices that they used to sell just a couple of years ago. And when that happens, when Microsoft and Meta and others see their stock price decline, I think they will start cutting back on their capital expenditures, which go towards NVIDIA today. So that's another one. Net income per quarter, $17 billion, up from 6, so 168% year over year. I expect this growth rate to decline very substantially in future quarters. It's going to go down to double digits in short order, and then we'll see where it goes after that. It may even go negative, I think. So these are GAAP results. These are non-GAAP results. Okay, as you can see, the revenue line items are the same, so there's no non-GAAP adjustment to the revenue items. Gross margins are essentially the same. Not much of a difference there. Operating expenses are lower in non-GAAP versus GAAP. I'm guessing there's some sort of stock-based compensation expense built into GAAP. In GAAP, generally accepted accounting principles, you have to account for non-cash stock-based compensation expense. And I agree with that methodology. I think stock-based compensation expense is an expense. that should be shown on the income statement. But management teams have some flexibility to exclude that in non-GAAP results, as long as they label non-GAAP and they provide the reconciliation table later on. So we can look into that as well. And that seems to be the difference between operating income on GAAP versus non-GAAP, and also that in net income as well. All right. Outlook. So the outlook will matter the most, obviously, for the stock price reaction after earnings are announced. Last quarter's outlook was revenue is expected to be 32.5 billion plus or minus 2%. And then some margin outlook, gross margin, notably. And then there's some operating expense forecast, and then other income, and then tax rate forecast. Okay. There's some operational highlights in data centers, gaming and AI PC, professional visualization, auto and robotics. This part and comments around this part could also be applicable to Tesla. We can look into that during the earnings call. But these are, a lot of these are kind of just name dropping about their customers, products. It's more of a product marketing type of segment of the press release. I don't really see much value in these parts in company releases. But as we build the DCF on Nvidia, I'm going to have to obviously take a closer look at these things. And then we'll tweak our DCF with the comments. We may tweak our DCF with the comments in these sections for more accuracy and resolution. Thank you very much to those of you letting me know your code check number, like Buffy is doing, at 192. So we're about to get to 200 likes on YouTube. If you haven't done so already, please subscribe to the channel and help support the channel's growth. I appreciate it. Thank you. And Nicole, thank you very much for becoming a YouTube member, supporting the channel. Let's continue. So let's take a little closer look at the statements here. Okay. Hustle Town, what do you see when you look at this table? Hustle Town, I can't hear you.
Oh, yeah. Give me a second real quick.
Okay, sure. Take it. You're on mute.
Sorry. The 3 months ended. This is 2024 to 2023. Boy, reading this is kind of like Greek to me. It looks like growth, right? For as far as profit and so their operating expenses are higher as well. Yeah, just when I look at this, I see growth.
Yeah. Okay, so when you look at this, you see growth. I think that's obviously true. Let's look at, so I just want to kind of understand where you stand when you're with your financial statement analysis or reading. So how do you go about doing this for Tesla? You have a Tesla position, you don't have a position in Nvidia, but do you look at financial statements for Tesla at all?
When I first started investing, I went back 5 years. So I opened up a position in about 2020, and I went back to 2015 or so and watched all the calls and kind of typed in what all the various different individuals in charge of the financial statements, watching them switch over. And every time it happened, I'd be like, why did they do it this way? And I'd say I'm at a 8th grade level. Like I obviously didn't go to school for it, and so some of the terms I have to go look up and whatnot and understand why the margins are this way. And so it's a very basic understanding. I wouldn't call myself an expert in any way, shape, or form.
Okay, cool. And you're willing to learn more, you said. This is what I did for work and also, education. I have a master's in accounting. If you have any questions at any point, please stop me, because if you have a question, that means most of the audience will also have a question.
Oh, for
So,
sure. That's why I'm here, because I
yeah,
want to learn more. And who
yeah,
better? I mean, this was your job. You got a master's in it. Yeah, I'm in the right
yeah.
spot.
Okay, cool. So, as we discussed, revenue is growing at a very rapid pace. I expect the pace of revenue growth to decline in the coming quarters, pretty much every quarter, and potentially turn negative in a year or two. Okay. So I think the pace of revenue growth will decline and potentially turn negative. And when we're building a DCF, we'll make a note of that. I'm going to start building DCF with tonight's announcement. So maybe tomorrow, or maybe even tonight, we can kind of get that going on the YouTube channel with the Excel spreadsheet. And now it's gonna start with these line items, and now we're gonna break the line items into more detail going forward in future episodes. So research and development increased 50% year over year in Q2. It looks like the increase in operating expenses in R&D accelerated in Q2 from Q1. So this is 6 months. So if you subtract the 3 months figures from the 6 months figures, you get the Q1 figures. And SG&A is very low, and it seems to be growing at a smaller pace, which is fine. Because obviously, as you add one more customer, you don't need necessarily one more accountant, one more lawyer, one more CEO, etc. But the R&D increase is interesting too, right? The R&D expense increase at 50% is pretty high. I'm guessing a lot of this is just stock-based compensation for the engineers. Like Tesla does a better job at keeping a lid on R&D expense growth, whereas Apple has also seen its R&D expense grow at a very rapid pace over the years. Operating income is basically gross profit minus total operating expenses, leads to this number. And then you have some non-operating incomes and expenses. So interest income from the cash on the balance sheet, then interest expense paid for the loans taken, and then some other. But these are non-operating incomes and expenses. They're not material to the valuation of the company, intrinsic value of the company, especially on an enterprise value level, not equity value level. And then income before income tax is essentially operating income plus other income, gets you to this number, minus tax expense equals net income. So far so good. Any questions?
Oh no, it sounds about right. I mean, looks good.
Yeah, so we have a question in live chat. Gook Wapanzi says, Yama, what's your rationale for the decline in Nvidia revenue in the next 2 years? So I didn't say that, right? I didn't say the revenue will decline in the next 2 years. I said the growth rate will decline, but it can potentially turn negative in the next couple of years. Like the rate can turn negative, right? So, but I'm pretty confident that the rate of growth will decline very rapidly. And that's because I believe in the last year or two, NVIDIA's revenue and profit growth is primarily due to the shortage, demand exceeding production. And some of these hyperscalers are shooting before aiming and overpaying for the GPUs by several times. And I think that market will stabilize. Just like back in 2021, 2022, Tesla cars were in shortage, and people were paying $70,000, $80,000 for a Model Y and waiting more than a year for their delivery. That's very similar to, I think, where the GPU market is today, essentially. Okay, let's continue. Diluted in net income per share is very similar to basic net income per share. So that means not many stock options outstanding. Yeah, price is lower than the stock price today. So that's interesting. And now weighted average shares used per share computation is very similar for both basic versus diluted. If you want more information on that, ask ChatGPT. Balance sheet. It's a very pretty clean balance sheet. $35 billion of cash equivalents, and marketable securities. And that is so 35 of 59, 35 of 60. That's majority. It's a very liquid balance sheet. So it's a very strong balance sheet. Okay. There's an increase of about 42% of AR from the start of the year in 2 quarters. That's in line with the revenue increase. So there's nothing too suspicious about that. There's a bit of an inventory increase, but small amounts compared to revenue increase. So nothing too suspicious on the asset side. It's a very liquid balance sheet. Property and equipment is $3.9 to $4.9 billion. I would be interested in what these are, $4.9 billion of property and equipment, because they don't manufacture the chips themselves. So a lot of that is going to be office buildings, etc. So we can dig into the 10Q, 10K to get a color on property and equipment later on. So let me just take that note real quick. Operating lease assets. Okay, goodwill is just going to be basically the companies they have acquired, and any value paid to the acquisition minus the intangible assets. Tangible assets and intangible assets. Identify the intangible assets is going to be assigned to goodwill. So anything that you can't account for with tangible assets or intangible assets is going to be in goodwill. Basically, the price that you kind of paid to buy the company, overpaid to buy the company. This doesn't get depreciated, but there is an annual test done to see if it's impaired. And if it's impaired, then I've actually worked on those assignments as well. But nothing too suspicious here. You can see the intangible assets, 1.12. So it's intangible assets are amortized over time, just like tangible assets are depreciated. So that's why it declines, unless if you add more through more acquisitions. And then there's some deferred income tax assets. That increased from 6.1 to 9.6 billion, which is interesting. So I'm going to take a note of that to see why that increased, deferred income tax assets, because it's not like the company is losing money. And maybe in some jurisdictions, I'm not sure. And then we'll take a closer look at that. That's also in 10Q. What percent of NVIDIA investors do you think Hustletown do this kind of level of analysis? Like what percent of, let's say, what percent of NVIDIA investors do you think can answer the question, why deferred income tax assets increase from beginning of the year to the mid 2024? And let's see if anyone in the live chat can answer that question. Like, for example, Gook is leaving. Yeah, that's true. Gook, this is a good point about the PP&E. So let's see if Gook knows the answer to the deferred income tax asset. Why did it increase even though Nvidia is making money?
I would say
Can't look it
less
up right
than
now.
I would say less than a quarter of retail investors for sure.
I will say less than 1% of retail investors can answer that question. I think many of the institutional investors can, maybe not off to the top of their head, whatever, but they would know where to look. And but I would say less than 1% of retail investors in Nvidia today can answer that question. And I would actually be shocked to see if one can answer, like even one person. And no response from Gook, as you can tell. Cookie just lets me know that we just reached 200 likes. Thank you very much, Cookie. Cookie Dough, great support of the space. I highly appreciate it. And thank you for letting me know that we just reached 200 likes in this episode. The goal is to get to 1,000 per episode. All right. Maybe NVIDIA's account for different tax rules on accounting rules or advanced payment of taxes. Yeah, we'll see. I'll look it up and then I'll let you know. Difference between tax rules and accounting rules, I don't think that would do it. And the advanced payment, I don't know why they would pay tax in advance, but I'll see. But this is true. Retail investors are not typically financial analysts, so almost none of them. But I mean, you don't have to be a financial analyst to know the reason, right? As long as you're doing a DCF, this question will definitely come up because this line is important for forecasting tax expense. So if you have a DCF, you have to forecast taxes, and part of the analysis is going to be the DTA, deferred income tax assets. And you're obviously going to ask the question, why the heck did it increase? Let's look it up right now.
Yeah, like I said before, I'm no financial analyst, but before I took a large chunk of my retirement and put it into Tesla, I wanted to know some financial analyst type things. And I would assume that many retail investors won't just be throwing it on the roulette table. I'd like to think some retail investors are following the financials at least a little bit.
Yeah. I think you're more optimistic than I am. Let's
Probably
see.
so.
All right, so this is the last annual report issued by NVIDIA. Let's just look for deferred tax. There you go. As of the end of fiscal 2024-2020, we had a valuation allowance of 1.6, 1.5 billion respectively related to capital loss carryforwards and certain state of the taxes determined not likely to be realized due to them. So my guess is that NVIDIA is reversing the valuation allowance. The valuation allowance is a contra asset account to the deferred tax asset. And as the company continues to generate income, my guess is that NVIDIA is reversing the allowance, which is what Tesla did as well. And that's leading to an increase in the DTA account. Okay. But if that's the case, they would let us know in the 10Q. So there you go, deferred tax assets. This is January to January. Okay. Valuation allowance, you can see here, there's a 1.5 billion. These are not the same periods. Okay, but my guess is that they got reduced this one in Q1 and Q2. Capitalized research and development expenditure. So that's also increasing. So maybe this is the reason then. Maybe valuation allowance is not it. Maybe capitalization of the research and development expenditure in deferred tax assets. I guess it's just a tax rule then. That's really interesting. This is really interesting. Because that would mean Nvidia is capitalizing expenses, and maybe it's allowed by GAAP and everything. But okay, so like Gook's answer was difference in tax accounting rules or advanced payment of taxes. But he didn't mention capitalized research R&D expenditure. Guilty deferred tax assets, accruals and reserve not currently deducted for tax. I mean, this is the reason. Capitalized research and development expenditure is the reason why DTA is going up. See, this is, and there you go. We just unlocked something that I think is material for investors. And I've never heard about this in NVIDIA crowds. Let's see. This is the only place that it shows up. Interesting. All right. I mean, this is definitely something I'm going to look into again more. So let me just make a note of this. I've never even heard about this in their earnings calls. Hustleton, do you understand what capitalized R&D expense means?
Not in the slightest.
Very nice sleuthing. What does sleuthing mean? Let me just see. Sleuthing definition.
I do know what
Careful
that
investigation
means,
into a crime and mystery. Yeah. Thank you. All right. Okay, we can switch out of this back to the earnings release.
Is that a one-off thing that you, or do you expect to see something of a similar nature in this upcoming?
Yeah, so basically what that means is, let me try to explain this accounting term. Okay, so R&D expense, whenever something is an expense, it shows up in the income statement. Okay, and in Tesla's case, we have R&D expense that shows up in operating expenses. And in NVIDIA's case as well, we have R&D expense that shows up in income statement. Here you go, right here. Research
I'm with you
and
so far.
development expense. Okay, it's one of the main buckets of operating expenses. These are your salaries and bonuses paid to your engineers, prototyping expenses, and other expenses related to research and development. Okay. But what NVIDIA is doing is that they're not recognizing, they're not booking 100% of the R&D expenses into the income statement as Tesla is doing. Okay. What they're saying is that some of this R&D expense, and there's some, just very black and white, there are accounting terminology that I'm not up to date with 100%, that allows managements to classify some of the R&D expense as that allows some of the R&D expense as an asset on the balance sheet over here and depreciate it over time, just like you would depreciate a factory or equipment or a tool, etc. Okay, whereas R&D expense on the income statement is a one-time expense. But what they're doing is some of the expense is being classified into balance sheet as an asset and then depreciated over time. That's why this is going up, and that's a major increase. Okay, which means, and I'm not saying NVIDIA management is doing this, Okay. But this allows some managements to classify more expenses than they should into the balance sheet and depreciate over time, and that would boost the near-term profitability at the expense of longer-term profitability, because you're shifting your expenses from current quarter, current period, to a future period in the form of depreciation. Does that make sense?
Yeah, it absolutely does. But is this going to continue, you think? Like they're going to continue to do this?
Yeah, I mean, they've been doing it for a long time. It does reduce the quality of earnings. It reduces the quality of earnings. Okay. But to the extent that those expenses should be recognized in the income statement. So again, I am not, claiming that Nvidia management is doing anything inappropriate here, but it is definitely something that should be looked into. Like, it's a possibility, right? Like a company that is generating $1 billion of quarterly net income. Let's assume two companies. There's a company A and then there's a company B that is both generating $1 billion of quarterly net income. Okay. But company A is capitalizing R&D expenses, whereas company B is recognizing R&D expenses, everything in the current quarter. Both the two $1 billion figures are not the same. And it would be very important to know that fact in forecasting for discounted cash DCF purposes, discounted cash flow purposes, because you would have to consider those capitalized R&D expenses and then depreciate that over time. And yeah, so this is really interesting. I've never heard of this before from any of the Nvidia bulls. So I mean, what we can do is right now go to the X account and let's see if Nvidia capitalized research and development expenses. And let's see who has even thought about this before. Nothing here. Let's see if there's anything here. Do you see a word capitalized here?
Not yet.
No, I don't see anything. So nothing there. Anything here? Nothing in this tweet. So there you go. I mean, there you go. Like, just the top few tweets, I don't see anyone pointing out that Nvidia has capitalized R&D expenses. $10 billion R&D expenditure. Nothing about capitalization. Nothing here. Nothing. Isn't that crazy that no one has ever pointed this out? That's so wild to me.
Especially with it being so much.
Yeah,
I'm
exactly.
curious what that
Especially
number
it being
is
so
gonna be.
much. Exactly. Yeah, that's so crazy. Anything here? Tax, R&D, nothing on capitalization. That's so crazy. Wow. Okay, let's switch back and continue. Where we are on timing, we have another hour to go to the earnings release. Okay. Let's see Gook. Very nice sleuthing. Capitalized expenses, the expense over time, cost is spread over the useful life of the yes, exactly. And then usually an asset with long-term benefit. I mean, no, I think in the R&D, capitalization R&D expenses have to do with the operation of the commercial readiness of a project. Actually, I can just look it up right now. For the exact term. So here you go. According to current tax regulations, you must capitalize all R&D expenses for tax years beginning, meaning that instead of deducting it immediately, you must spread the cost over a period of amortizing them. Tax law change. Domestic R&D costs are amortized over 5 years. Impact on financial expenses. Capitalized R&D expense means that these costs will appear on the balance sheet as an intangible asset instead of being immediately expensed over the term. So maybe this is actually this is December 2021. And I hear once you've achieved technology, I think this is what it has to do with. So clearly, Nvidia is not capitalizing all R&D expenses. They have a lot of them in the income statement as well. So I don't think that applies. But here you can see, once you've achieved technological feasibility, you can start capitalizing cost in development stage. So basically, you have stages of R&D. Before technological feasibility, there's a development stage, and then once it becomes commercial, it then goes into cost of goods sold, essentially, as you sell the product. The final stage, because when you make your product available for sale, at this point, you can no longer capitalize. So first, you have to expense before technological feasibility as you're doing research. Then you have to capitalize during the development stage. Then you start expensing again as you start when the product is available for sale. Okay. So those are that's just kind of general understanding of it based on a Google search. But I do remember that topic because I was studying accounting, and I'm just pointing it out that this is an area that's a bit of a gray area, and it gives management tremendous amount of ability to massage earnings. I'm not saying Nvidia does it, but it's something that people should keep in mind. Okay, let's continue. So that's the asset side. Liabilities, AP is fine, in line with the revenue increases. Accrued and other current liabilities, a huge jump. Okay. We saw a 40% jump in AR. There is about a 50% increase in accrued and other current liabilities, and then there's some AP increase as well. Together, that's in line with the AR increase and in line with the revenue increase. So I wouldn't think too much of it, but I would definitely look into why this increase in 6 months from 6.7 billion to 10.3 billion. They paid off some short-term debt. Long-term debt remains stable. It's a very liquid balance sheet. A very liquid balance sheet. Okay. Not much debt on the balance sheet. I mean, only like long-term debt is only 10% of the assets. So that's fine. No short-term debt. That's fine. There's a bit of a AP accrued liabilities, but it's reasonable levels. And then equity is growing fine. Cash flow, 3 months to 3 months, year over year, and then year to date, 2024, 2023. Starts with net income, and then you make your adjustments. There's a stock-based comp that you add back. DNA, you add back. Not much of an increase here. Nothing abnormal there. Nothing abnormal here. Gains on investment, non-affiliate entities and publicly held equity securities. So, Nvidia has investments in smaller companies, and they have to adjust for the gains and the losses that they make in those companies. Deferred income taxes, you adjust for the change to the extent. So these are the non-cash portion of the change on the balance sheet. And then you also make changes, adjust for the variance in your working capital, AR, inventories, prepaid expenses, AP. And then you get to a net cash provided by operating expense activities, 6.3 to 14.5, 9.3 to 29.8. Obviously, very strong. And then you have your proceeds from maturities, marketable securities. I'm guessing these are treasury bills. Purchase of marketable securities. So some expired. Some matured, and then they bought more. And nothing too interesting here. Is a $1.3 billion, $1 billion purchase related to PP&E intangible assets. I will look into that. But that's probably what Gook mentioned earlier. Bradley Brown says, R&D with alternative future use, materials, equipment, facilities may be capitalized, ASC 730, I think. Okay, thank you very much, Bradley. Let's continue. Cash flow financing. So these are the repurchases of common stock. As you can see, they went up from $3.1 billion to $7.2 billion. $3.1 billion a year ago quarter, Q2. $7.2 billion this past Q2. So there's a massive increase in the stock repurchase. $3 billion year to date in the last year to $15 billion this year. Again, a massive increase. So the management clearly believes that the stock is undervalued and the run will continue. That's interesting. Repayment of debts, they pay down the short-term debt, as we mentioned earlier. Dividends paid are very tiny. And nothing else interesting here. GAAP to non-GAAP. There's some stock-based compensation, but that's not all of it. There's acquisition-related other costs, A, not A. And there you go, stock-based comp right here. Is a gross profit. Okay, so not much stock-based comp expense in the gross profit, very little. These would be your production workers, I'm guessing. And then your engineers' stock-based comp expense is the primary difference between GAAP and non-GAAP, just like Tesla. And I think they should be accounted as an actual expense. So in Nvidia's case, I will look into GAAP results, not non-GAAP results. Acquisition-related other costs. These are tiny amounts. I'm going to skip this for now. And then the outlook. There you go. That's it. That's the release. So it's going to come out in an hour. I don't want to continue this for another hour. But maybe we can do an NVIDIA watch party starting in an hour. Okay?
Yeah, I just won't be able to. Yeah, I won't be able to attend that, but
that's fine. Don't worry about it. All right. I'll talk to you later then. Thank you very much, everybody. And chat in an hour for the NVIDIA earnings watch party. Take care.
See you mañana.